Hello friends, in the series on the income tax cases, today we will discuss the case of Assistant Commissioner of Income Tax versus BHARTIHAXACOM Limited. This case has been reported in 105 ITR Tribunal Short Note 74 and the matter has been decided by Honorable Delhi ITAT A Bench and the date of the judgment is 19th July 2023. In this case, the assessee is in the business of cellular, phone and landline services. As all we know that in case of cellular and landline services, when the connection is given to the subscriber or the customer, then the company has to do the due verification of the subscriber due to security reasons, because no one can use that connection for illegal purposes. That is why the due verification of the customers is necessary. When the agreement is done by the telecom department with the operator, that is assessee, then there are clauses that if you will not do the due verification of the subscribers and will give the connections, then there will be penalties on you. In this case also, there were huge penalties on the assessee which were duly paid by the assessee and claimed as revenue expenditure under section 37 subsection 1. The assessing officer was of the opinion that this is for the infringement of the law, this is for the violation of the law, it is not in the normal course of business. That is why he disallowed this penalty. When this matter was before the ITAT by following his own judgment for the assessment year 15-16 held that this is not for any violation of any act, but it is for the violation of the terms and conditions of the agreement between the telecom department and the assessee. So it was in the course of the business and it should be allowed. The second issue was that the assessee was giving its services to the dealers at the discounted price, and there was difference between maximum retail price of the cash cards and the discounted price, which the assessing officer held as commission and made the addition under section 40A clause IA by holding that the assessee should have deducted the TDS on the difference between the maximum retail price and discounted price, because that is a commission to the dealers. So the second question before the ITAT was that whether the difference between maximum retail price and the discounted price is commission or not. The ITAT held that by following its own judgment for the assessment year 15-16 that there is no principal agent relationship between the assessee and the dealers. So the difference between the maximum retail price and the discounted price cannot be termed as commission, and there was no liability for deducting TDS under section 194H, and hence disallowance made by the learned assessing officer under section 40A clause IA does not warrant. Now the question comes after the third issue, that is the license fees paid by the assessee to the telecom department, because as all we know that for operating this telecommunication services, a hefty license fees is being paid. The assessee was claiming this license fees as revenue expenditure, and assessing officer was of the view that this is not an revenue expenditure, so it should be disallowed. The ITAT, by following the judgment of the Delhi High Court in the assessee's own case, that is Principal CIT versus BHARTIHAXACOM Limited, which was reported in 417 ITR 250, allowed this expenditure also, that the license fees paid by the assessee is not a capital expenditure, it is a revenue expenditure. But as an update, I want to tell this thing that this judgment has been reversed by the Supreme Court on 16th October 2023 by holding that the license fees paid by the telecom companies to the Department of Telecommunications is not a revenue expenditure, it is a capital expenditure. So although in this case the ITAT gave relief to the assessee, but as on date the position is that the license fees paid by the telecom companies is not a revenue expenditure. Thank you, friends.